Cisco shares really driving this market today, rallying incredibly sharply at the open. Kind of reported, well, I don't want to call it record quarter because it doesn't make it be as good as it is. That's why I'm so glad we have Chuck Robbins here. And Chuck, I got to tell you, of all the quarters, and I've known you forever, I knew your predecessor and his predecessor, I think it's the best quarter I've ever seen from Cisco. And you got to tell people, how is that possible? Product orders up 35%, networking orders were up more than 50%. I don't even think it'd be possible. You did the whole year in one quarter.
Yeah, thanks, Jim. It was a great quarter, and I'm really proud of the team and what we've been executing on. If you go back a decade, we bought a small silicon company that they haven't even taped out a chip yet, but we believed in their vision and believed in the people because they had a history of executing, and that's turned into our silicon strategy, which is, if we didn't have it, we would have zero revenue out of the hyperscalers. So it's turned out to be a great move. You combine that with optics, and you combine that with this AI acceleration that we're starting to see in the enterprise, and everything just came together this quarter.
I think people may not understand, including some of these analysts, Silicon One made it so that you could not be hostage to some other companies we know. I mean, Broadcom, whatever. You were in charge. So you were in charge of your own destiny. And that when these hyperscalers came, including when we met together, we met with Jensen, who's a big hyperscaler supplier, you were able to tell them what you could get, and they wanted your certainty.
Yeah, you're right. Our Silicon One strategy has basically allowed us to control more of our destiny and control more of our supply chain. So we design our own silicon. And what the hyperscalers want is they want silicon diversity. So they want multiple sources. And this has always been true in the telecom space forever. Years ago, the telcos they would have two different systems providers, and the hyperscalers take it all the way to the silicon level. So the fact is, and I've said this several times, if they're moving to open source software and you don't have silicon, you're just not going to play there. And so having that silicon is a key to us operating at place. But we also, the enterprise was on, enterprise, public sector, everything was hot this quarter.
Before I give it over to Carl, multiple hyperscalers, 2 for optics. The Acacia, oh my God, did that pay off. So you made a series of acquisitions. I wrote, Chuck made these acquisitions, fantastic.
Yeah, the Acacia one was interesting because I remember at the time China approval lapsed and we had to renegotiate the deal, but we stuck with it and got it done. And it turned out to be just another incredible idea by our team. I'd like to take credit for it, but we have great people who had the idea.
Hold on, when things weren't good, you took credit for that. I'm giving you an A+ on it now.
Well, so you get this Acacia optics for a lot of scale across, which is data center connectivity, and as these data centers expand. And we did have 5 new design wins in the hyperscalers this quarter we talked about. 2 were in the optics space, and then 3 were in the system space. And 2 of the 3 in the system space were the routing layer on top of these data center interconnects. So, and then we have another one that we learned about in the last week or two. So we've got a lot of momentum right now with the team. We still have to execute. If we miss execute in silicon, then it's a problem. So the team still have to execute.
But you have your hyperscaler target has been met with the full quarter left to go. Yes.
Yes.
That's what, the $5 billion?
We said $5 billion at the beginning of our fiscal year. We got to $5.3 billion after 3 quarters, and we said that we're raising our annual estimate to $9 billion, which implies $3.7 billion in the quarter we're in right now. Yeah.
People have been looking at the long-term chart. That's a year-to-date, but go back.
It looks like the long-term one.
I don't know if we can go. That's your tenure, but then if you look at 30 years, 28 years, people are looking at analogs to the late 90s.
Right.
How do you think about the 2 eras that we're in?
Well, I think they certainly, this is moving faster, and I think the customers that are consuming all this technology are highly profitable, high cash flow, and they view this technology as existential to their business. So it's a lot different than startups that we're buying, and there are a lot of financing going on, and so it's different in that way. But I've never seen a market that is so dynamic. Think about Mythos with Anthropic. If I'd have been on here 90 days ago, we wouldn't have even been talking about it. And now it's like the #1 topic that we talk about with almost every customer on the planet right now. So this thing's moving incredibly fast.
Well, and you've got great security that turned out to be
it's getting
important.
Better.
that fellow you introduced, that terrific security guy you have now.
Yeah.
He's great. Now, okay, so there was a lot of talk about the layoffs that you were able to have. And candidly, it's 4,000 people. These things would not have normally been talked about if it weren't for AI replacing talk. That was not really what occurred here, right? You just kind of tightened up.
We intentionally wanted to stay away from having that appear to be an excuse because that's not why we're doing it. It's what we have to do is we need more funding in silicon, we need more funding in optics, we need more funding in our AI solutions, and we need more funding in security. And given the speed at which the market is moving, we need to make a rapid reallocation of resources. And by the way, a lot of the people that are potentially impacted will actually go take those jobs.
Okay.
So we work really hard. And look, when we say it's not a cost reduction, it's a reallocation, that means absolutely nothing to the employee who's impacted, and we get that, and I understand that. So we work very hard to try to ensure that if at all possible, we take these employees and we shift them into these. If they have the skills to do it, if we can train them to do it, then we'll do that.
And then something that Carl alluded to, which is that the sheer number of orders that happened. And then you go over with the conference call, there actually was an analyst who basically said, well, you sandbagged, you had all the orders, and you came back with something that was amazing, which is like, you don't understand, this market is like this. They're like, you pick up the phone, they want it, and they want it now.
Well, you have these hyperscalers. We've had projects that we agreed to work on that they've subsequently decided not to do, and that's the nature of the business. And then you have these massive build-outs that they come to you with, and they have a whole 12-month layout of what they want to buy. And so, somebody said, why are you not giving us a bookings number for next year? It's like, well, we don't have visibility completely yet, but we have we have enough understanding of our relationship and the design wins and what their capital commitments are that we feel good about where we're headed. But it's very dynamic, and you have to be.
You said just now that, look, if we don't execute, then it could get hurt. I think what you left out, Chuck, I think if you execute well, there could be some real upside.
It feels like there's a bit of a networking super cycle that we're entering right now, and I remember sitting in a boardroom literally probably 7 or 8 years ago when someone said, "Are we sure that companies are going to continue to buy Ethernet switch ports?" And I think we've proven that that's definitely the case, and lots of them.
You mentioned the dynamic nature of the market, how we wouldn't have talked about Mythos a couple quarters ago. Is there a corner right now that you're looking around that you don't think the street necessarily understands? I mean, something we might be talking about a couple quarters from now?
No, because I didn't know about Mythos 90 days ago, so I'd love to tell you. I have this mystery thing that I'm going to share with you on the air today, but I think that what it says, though, is you have to be agile and you have to be ready to move. But if you think about the Mythos implications, we haven't even gotten to that yet in the business, right? Because every customer right now is looking at, where do I have vulnerabilities? Where am I unpatched? And the real issue is, where do I have equipment that is well past the last day of support?
Right.
And there's a lot out there that customers, because this stuff just works.
Right.
And one customer said to me, I take a budget request to my CEO, and it says refresh, and they say, we'll do that next year. Now I go and say security risk, and they say we're going to do it now. And that's what it's turned into with Mythos.